All right, guys. Well, welcome. Um, Getting this started was almost as crazy as this market is. So, thank you for joining. This is not going to be a long topic, but it's one that's very important. And we're going to be talking about the housing supply versus demand right now. What we hear is a lot of people saying that, we're coming to a point where the market's crashing, prices are going to go down. And I'm just here to show you guys the facts and what's really going on here. So you can see exactly what this looks like right now as far as the numbers are concerned and what they look like in the past, because right now we have a supply issue, huge supply issue. If you're looking at people that are moving, or moving up or relocating, we're looking at 1.4, 1.5 million, people, whether they're kids moving out of their parents' house or just big major changes where they're upsizing to different properties. And just the one slides I really want to focus on today is kind of going into the housing starts. If you're looking at where the market was even back to 2007, 17 down to 2018, we saw we had a ton of inventory. And walking into, we had a little bit of a spike here when everyone started selling here right before 2022, but now we have a big lull, which means we have a supply issue. You have a lot of people out there. We have all these people looking to move in, right? But now we only have 1 million, little over 1 million properties, and we have 1.5 million people trying to relocate and move into something. And that doesn't count the people that are outgrowing their house or all this other stuff as well. These are just new starts, new people coming in to the market. Okay, so the inventory, basically, if you look back, we're going back to 2015. You have different rate structures, investor pullbacks, and you could see how the inventory was pretty high coming out of the last, we had 2007, 8, where everything crashed, and that kind of buildup. If this would keep going back to 2011, 12, you would start seeing this ramp up. If you see my cursor, it would have started ramping up, and it kind of came up and went down a little, stayed up. But as you can see, there was some inventory on the market, and it went pretty well until we hit about right around the pandemic time. And we just saw a big crash down. And a little bit of a spike came up into 2021. And as you see now, inventory it's up about 4.5% this week, but that's only 1.7 lower than where it was last year. So leaving us at a number that's not. What does that mean? I mean, for most people, we say that means that we're not looking at a crash right now. We're looking at always a high demand, people looking. I don't see where prices are going to keep going. Well, we can't sustain a rate of 20, 30% a year on increase, right? On home property values over we did the last year. But what people are saying is they're like, oh, the prices are crashing. That's not necessarily true. What's happening is all these agents that overpriced their listings over the last 6-7 months are coming back to reality, and they're pricing them accordingly, which is still up from where it was the last couple of years. So it's not technically going down. It's just not rapidly increasing like people or sellers would want it to. It's more, we're coming back to reality where the prices are going to continue to go up. So here's a nice spreadsheet, guys, from realtor.com that we can kind of take a peek at for active listing counts. Up 8% in May 2022. But if we're looking at this chart here, I mean, you're looking at some of these other years, 2017, we had a ton of active listings. If you can kind of look at where we are in 2022, we have a little bit of an increase, but these last 2 years, it's been super, super low, which means with all the people that are out there, the increase of, people in general, and all these millennials kind of moving into, now they're coming in strong into the housing market. There's not enough to sustain it, which means people have to buy houses, which means prices aren't going to go crash. They're just going to level out. This is a very important slide, guys, because this is so much different. If you look at the chart, I hope you guys can see my cursor, but if we go back to 06 all the way to 2022, if you look at this green thing, this is the percentage of mortgage debt to borrowers with a credit score of 700 or better, how much debt they had, right? And then if you look at the blue line, it's the equity they had. So even all the way back to 06, they had more debt to the equity, right? More debt to the equity. If you ask me, if you look in here, 2009 as the market tanked, well, 2007 is when we started this implosion, right? In November, right? You saw this massive decline, but you had this massive debt adding up. So what were people doing? Well, why am I going to pay for something that's not even worth it, right? That was the mentality of a lot of people. And other than, some people had hardships, but a lot of people were just walking away because they had no skin in the game. They had no value in their house and they had no money down. So they didn't have anything going on. If we look at what's going on today, right? Look at this. The mortgage debt based on where the equity is, you're going to have somebody really hard pressed to walk away from their home that they've owned, how long it's been, even if it's only been 3 years and they've gained this kind of equity and they only have this much debt. They're not walking away from, that's money. It's money in the bank. So, when you look at, the equity and where underwriters have to underwrite these loans, and people have a lot of skin in the game, whether they're putting down 10%, 20%, 30%, you have a lot of cash buyers in parts of the markets right now. So there's a lot of equity. That's going to keep those prices from crashing, because why would people walk away unless there was some serious hardships? People will find a way. I think it's a little bit different, not a little bit different, much different than what it was then. I think this shot alone, guys, will be something you could show to somebody and they could wrap their head around it. A buyer could wrap their head around this and say, yeah, that makes sense. I don't think we're coming into a crash. If anything, those crossroads, if you look, the equity continues to climb and the debt seems to be dipping. Even if that debt, I'm pointing at the screen, guys, with my cursor, even if that debt started coming back up, there's still such an equity spread here that will keep this market from moving forward. So if it goes on an average rate of 3 to 5% a year, even 3 on a low end to 5%, you're still gaining equity every year and your debt is still lowering. So, I think we can say goodbye to the days of 10% or all this, the crazy thing that we've been seeing. So, lastly, guys, we got about 2 minutes here. The existing home inventory and what we're with what's active for listings. There's not a lot. There's not a lot that's out there. We're literally about 200,000 under. We're already 5 million underbuilt right now. But every year, right now, we're still another 200,000. So that just means we're not even going in the right direction to catch up to the 5 million. We're still going in there's more of a deficit growing, which means demand's going to still be high, right? If we go down to the active home listings right now in the US, if we go back to 2017, we had about 75% of the market. Now this is only 75%, 1.5. So it's probably more like 2 million because there was some that were under contract in this period. And if you go only down to here from January 2020, if we look here at this line, you see, we're all the way down to, we're about 33 from its lowest spot, right? Over right now. We're only 33,000 from the start. So this, guys, what I want to impress upon you is when you get those questions or you hear people saying, you know what, this market's crashing, I can already see the prices coming down. I would beg to differ and I would combat that in a sense. And I don't want to be combative, but I would communicate in a way to say reality setting into where we're not going to just throw some crazy number of a value out there. We're going to have to come back down to earth and price it at where it is, which is still much higher than it was a year or two ago. and it's just leveling out in a sense, but still continuing to rise just because we have a supply demand issue. We have a lot of people looking to buy and not enough inventory. So I hope you guys can go out there. Hope we're arming you with some good information to bring to your buyers, and your sellers. What does this mean for sellers? This means you're still going to make money on there's still a high demand. This is still a great time to sell. So if people are sitting on the fence, like, oh, maybe I'm not going to sell because, I'm not going to get as much money, I'm going to wait. You're still going to gain, you're still going to get the money because there's a demand issue. People are out there looking to buy. You're possibly not going to get someone to pay you $100,000 over the fictitious asking price that you put out there, but you're still going to hold your value. You're not going to be losing money as a seller, and as a buyer, you're going to still see these rates at an all-time low. And you're still out there hunting. And with what you guys have to combat with, guys, you have some good information. Let us leverage some of this information that's out there so you can bring it to your buyers, get them out in the market, and get to your sellers and say, let's sell your property now, because prices are going to continue to go up. If you go to buy something high, sell high, you're going to end up buying high, and you may even be buying at a higher rate. So now is still a great time. That's the premise of and the basis of what I wanted to get across to you today. Supply demand issues in the country. There's not a lot of supply. The prices are going to continue to go up at a regular normal rate, not at an obscene rate that we've seen in the past. And we're not looking at any crashes, because the third point is there's a lot of equity in the homes that are out there. Okay. And there's a lot of, there's less debt and more equity, which historically speaking, people don't walk away from a lot of equity, right? So get out there, guys. If you have any questions, please feel free to message me. I'm here for you guys. Thank you for joining us here on Coffee with Chris on Thursday. And I look forward to, talking with you guys. Remember, we have an event tomorrow. If you guys are on this call and you have not registered for our Rene Rodriguez event, please, Rene Rodriguez, amplify your influence. That's going to be tomorrow. If you're here in the Sarasota or Southwest Florida area, we're going to have a live event here at the Realtor Association of Sarasota Manatee over off of Bee Ridge. Please reach out to me. I'll get you in. We have serving lunch. It's going to be a great event. We're going to have a lot of realtors, so good for networking. We're going to be doing a lot of giveaways, also giving away a lot of books. Renee's book on amplifying your influence. This is going to help you in a tight market to where you can win your customers, whether you're selling your listings. He's one of the experts, a leading expert in the space. He coaches around the world with folks, names you might recognize, Grant Cardone, a few other big names that you'll hear about. But you don't want to miss the event. We also have a virtual event. You can just sign up. It's going to be from 12 Eastern time to 2. If you're coming to the live event, 11:30. So thank you. God bless. Make it a great day, and hope you guys get out there. Learners are earners, as they say. So if you're studying your craft and becoming the best at what you do, it's going to pay you back in dividends. So we want to be able to provide you with information and educate you in ways that can help you be better. So again, make it a great day, and we'll see you either tomorrow or we'll see you next week. Thank you.